Okay. Hello, everybody, and welcome to ECB Live. We are Thursday, the 8th of September, 2022. So, just going to get ECB interest rate decision for September coming out in about 15 minutes' time. We're going to get the statement release, and then at 1:45, we are going to get Christine Lagarde, the very elegant Christine, to give her speech on the presser at 1:45. So, just going to have a little bit of a run over the markets, and then we'll talk about what to expect out of this policy or this statement. So let's get over onto these charts, and so here we are. We're looking at DAX down 1.3%, sitting around a monthly level here at the moment, marking the end of this or bottom of this arrow, bottom of the prior hour, I should say. You're seeing the euro up 0.35%, quite a weak dollar, I have to say, this morning, selling off pivot, and U.S. equities holding relatively well, retracing all of the selling that we've seen since Monday, holding on highs of the week so far in the US. Buns as well, it's quite steady as she goes. For me, I am looking at a target on the downside, 143.40s before I'd be interested in looking for longs right now. But with this policy sort of policy statement coming out, we may get a little bit of a slip and a trip to the downside that will be outsized here. So let's see what we can get over this statement. Reed just shared a crib sheet in the room here, really, really good. You're looking at the base case scenario. Well, we'll get into this in a second, but just really wanted to look at where these markets lie. Oil, of course, is the most beaten up asset class, I think, so far this week and last probably. We're sitting down here. What are we down? Well, we're actually positive 0.4%. We were looking at this area last night, the 8308s for support. Did come in. We did get quite a little bounce from there. It was quite nice. But essentially, since then, since that sort of 3 o'clock into 4 o'clock period, we just then kept selling down below. And I did kind of say that if we did pierce this level initially, the 8308, that we would keep going down. And I did I was short this coming down, but did flip actually then for a nice little retracement back up, because at the time when we came down here, pierced the level, there was about 100 odd or 200 odd lots sitting below low of day, and the market just didn't have the energy to take it out. And so then we started seeing stacked offers, and so easy to kind of go with the flip and get a little bit of a nip out of that. So for me, oil is super, super weak down here. I think because of the trade we put in down here this morning, I think it's only a matter of time before we start putting in further downside, notwithstanding headline risk or OPEC commentary, of course. They may want to come out and talk further about more cuts. More cuts. Who knows? So that's where we lie. And gold coming off of lows. We were here quite a few weeks ago, actually. We were down around these levels here. Oh, sorry, hold on a second. Just let me fix the chart. Here we are. So we were down here before a number of weeks ago. If I just bring up the daily bar here, you'll have a look. So when was it? The week of the 18th of July. We were down around these levels, and we're in this massive bull flag here, and I think it's worth buying gold again down here for the push back up. That's what I'm looking at on gold. So just to kind of make people aware, over these type of events, it's always good to kind of pick one or two products that you want to trade. You don't want to be running into the market just willing to shoot at everything and anything over these type of events, because invariably you're just going to get a lot of volatility, right? So anyway, let's bring it back to ECB, coming in just on 10 minutes now. So essentially what we're looking at as a base case scenario here is moderately hawkish. expected to hike 75 basis points. I think the pricing on that is 95% probable is the expectation from the market. Um, maintaining a fully data dependent approach. So they're kind of willing to or not willing to commit to what they may or may not do in the next meeting. That's kind of what they've been saying so far, the ECB. Um, things to look out for are any changes in the APP asset purchasing program. Not expected to see any change on that today. But with this hawkishness, uh, yeah, I mean, I personally speaking, I think if we see you know hear anything more hawkish, or if it comes out at a 1% hike, I think we're gonna be up flying at 101s on euro and a lot higher. Uh, I think if we come out at anything less than a 75 basis point hike, I think I don't know, you're probably gonna see euro back down here. Because ultimately, what the ECB are looking at is hot, hot, hot inflation, piping hot, 9.1%, um, up from 8.9 on the prior readings here, and the supercore metric going to 4.3 from 4%. So energy really kind of driving a lot of this, and no end in sight. Of course, Europe as well. We have the problem of gas as well as oil price. I mean, oil prices coming off, it's helped quite a bit, but it's got to stay low for quite some time to have a read across effect. But while we see moderating figures of inflation in the states, with strong jobs and strong GDP, sorry, strong jobs and incrementally lower GDP. In the eurozone here, we're looking at incrementally higher inflation and lower construction PMIs and general PMIs, right? So indicating that the economy is slackening off and inflation is keeping going up, right? So this is the nasty duo, right? So um, second round effects of inflation, of course, would be those PMI readings, staying quite low, and so that there's quite a lot to digest now from a trading point of view, which is kind of what we're doing here. Is we don't really want to jump at these markets. We want to kind of sit back, see what happens, and then really look forward to the US session. Now, you're probably going to see some wild moves on the euro and the bund. Um, the biggest moves will probably come over this data release. Then we will come into the speech at 1:45, and I will rebroadcast uh, on this. Um, at that point, you're going to be back to volatility, waiting to see if we get a little more hawkish on the commentary from Christine, or more dovish. What we've seen from Christine Lagarde at most of her pressers is that if there's one thing she knows how to do, it's how to control market expectations on events like this. I don't see it coming out as anything but 75 basis point hike. But as traders, we need to be primed up and ready to trade something that's a change on this. So yeah, listen, I don't want to keep talking just for the sake of talking here. So I'm going to yeah, as always, it's a good spread. Shout out to YouTube. Hope everything's doing good out in YouTube land. Broadcasting. You're seeing oil coming back to the bottom of this area. Just what this area is on oil is this. So, um, looking at the low here. of the 15th of May. Oh, sorry, March this year. So I don't see this as being a really tough resistance point here, seeing as we just kind of came through it yesterday. Haven't really made any call on it today in trade so far. I think we could easily slice back up through here to find resistance, probably somewhere a little more like eval 8360s in around here. In there. So we'll just see what we can get there. Gold too high to buy really at the moment. Yeah, unfortunately the Queen not doing so well here, and it's probably a bad turn she got from meeting Liz Truss. Yeah, so for Pepe, yeah, I mean for me to plan, my plan for trading this is actually not do anything at all. I'm gonna have my ladder. Here we go. 1 minute.
Are split in their views over a 50 or 75 basis point move. How the market pricing is very much leaning in favor towards a 75 basis point move.
All right, coming in just under a minute now. Yeah, I'm going to be looking at my euro for this and bonds. Really, that's it. Maybe a bit of DAX, but not looking at US products there at all. Euro just on a pullback here.
Ten seconds.
Here we go.
That's hike 75. That's hike 75. Taking the deposit rate to 0.75% from 0%. Main refi, that's now 1.25%, up from the prior of 0.5%.
Along the
So
bond.
the ECB does note that future policy rate decisions will continue to be data dependent and following a meeting by meeting approach. And then based on its current assessment, over the next several meetings, the ECB expects to raise interest rates
Boom.
further to dampen demand and guard against the risk of persistent upward shift in inflation expectations. So that's a 75 basis point hike here. And the ECB taking a flexible approach, but ultimately still intent on taking further interest rate increases over the next several meetings. Just going to have a scan through the rest of the release. So now... And then now, just in terms of the accompanying macro projections, so they've significantly revised up their inflation expectations. Inflation is now expected to average 8.1% in 2022, 5.5% in 2023, and 2.3% in 2024. So the ECB does also note that the major step front loads the transition from prevailing highly accommodative level of policy rates towards levels that ensure timely return inflation to the ECB's 2% target.
Okay. We're going to call it there. All right. So just
And
75
then from a
basis
growth
point.
perspective, after a rebound in the first half of 2022,
75
recent
basis
data
point
does
hike has
point to
come.
a substantial...
Sorry. I just got that squawk to quieten down a bit. Yeah, so there we go. We got it. 75 basis point rate hike came in there and looking to do bigger or more in the next meeting. So not good for equities. Upside on the bond, upside in euro. Very contained though so far. Really, really contained. You're seeing monthly p-val trading as a nice support here on the euro. Nice action there. I was in and out within a few seconds on that one. Not really going for a hero trade, just letting the computer manage the profits on that one, trailing a stop. Same on the bund. What did want to get back in the bund here, but actually it's stalling quite a bit right now, and so I don't think I want to go back in for seconds. Short the DAX now on this as well. It's really had a weak attempt to hold on the some bigger VWAPs here, bigger periodicities, and I think that's being a bit of a sign now that we should weaken off on that equity index. So here we are on the DAX. Look at that, bang, up to VWAP, down, back down she goes. Right, this is what we do, easy peasy, every day. Do please hit the link to subscribe. Join us in the room any day. Now, also actually coming off best levels there as well. Yeah, 75 base indeed. So, yeah, look, DAX not looking great here for putting in anything like a new high on the day. US equities also a little bit of excess here in the morning and the past 2 hours, so not looking great for holding the line at the 39.74 quarter. And Dow testing the yearly p-val here. I'm short this market. I don't see strength here. Saying that yesterday, I didn't actually see strength yesterday. I was actually looking for downside yesterday. Did not come in. And there you see the bund kind of back down. Yeah, back down to kind of in around. What are we looking at here? QP val actually 1488. 144.88 on bund. So no, I'm one and done on that one today, thankfully. DAX now accelerating into the low, or well, down from VWAP, not into the lows. Euro underneath its starting levels. Implied 50 basis point hike now for the next meeting. Okay, so yeah, I mean yeah, we get the 75 basis point hike, but I think that from what we're hearing out of the statement from the squawk, I think this presser is going to be pretty hawkish. So yeah, all right, we're looking for next up on the data slate is initial jobless claims coming up in 9 minutes. We're looking for 240,000 prior 232,000, and then in 23 minutes time we'll have the presser. About 20 minutes into Christine's chat, Powell, Fed Chair Powell will start talking. But we're going to stick with Christine for this. Yeah, dollar also pushed into VWAP there on that. I mean, that's yeah. So pretty much this was fully priced in. 95% probability that we were going to get the 75 basis point hike. So, very quiet euro. It's another Christine show, really. Let's see if she can contain the currency in and around these levels throughout the speech. Got taken out in a trailing stop there on the DAX, and uh, okay with that. So who we got out there in YouTube land? Time to burn 5 minutes until we get jobless, initial jobless out of the US. Expectation 240,000. below prior 232,000. Tier 1 data. So a little bit of a bid into cable there because of Queen Elizabeth's healthcare issues at the moment. So keep an eye on that one. Keep an eye on that one. Pretty wild. If the unfortunate bad news would come, I think the pretty big jump in the pound. A little bit annoyed about getting taken out on fail stop there, or DAX, but fuck it. Oh, I don't know if I can say that on YouTube, can I? Sure. Okay, so market's waiting now for this for Christine, and first up, initial jobless. 2 minutes. Yeah, just for the guys on the oil spread on the 3-month cal there, seems to be kind of lifting actually on the spread. .1 minute now for jobless claims. I'll read out the figure with the hit or miss the front. 240 expectation above prior 232. .10 seconds. Looking at spoos for this one. Missed 222,000. Below expected 240. Again, that's a miss. 222,000. Expectation 240. Prior revised lower to 228 as well. So really really great direction for these jobless figures, but that is going to feed into potentially a more hawkish Fed. Not much going on there now. Not much going on really on equities on the back of that news. All right, we're about 14 minutes off of the presser. Christine. The lowest jobless figure since May. Oil getting under pressure again here. In the Dow, getting pressurized also on VWAP. Targets for me on the downside on oil WTI 78.77 is the target. 78.77. All right, that's your level down here. Let me show you that on the daily. All right, so this is big old level, ye old level. Do I have a tag on that one? I don't actually. So 50 lashes for me. But yeah, there it is. Okay, so basically it's the April and June highs of 2015. Now, in terms of balance, we are going to be looking at that as a theme just after the 2 o'clock marker, as per usual. But yeah, I think we can manage to tack on some pretty dicey lows today. Okay, we got the VIX here moving back up to trend here. This is the bull flag trend low up here. I think we're looking at 2565s up here as the target on the VIX. So we're looking at essentially coming into the speech now in 10 minutes. 50 basis point hike in October and December. Something I'm hearing here. Oil back on VWAP. My mug off the screen here. All right, got 6 minutes now until the presser. Gold, nice little pullback onto the top of this area. 1727. Bunds now pressing lows on day here on the bunds. Lows on day. Am I naked short on oil? No, I'm not. I'm not naked short. I am about 60% hedged on a short position on the front. Holding shorts on Dow. And there we go with the Dow moving down to the lows on day. Okay, 3 minutes or 2 minutes now. Okay, so if Christine comes out here swinging the bat, saying essentially that they're willing to do a lot more at any time should inflation become, if we get even further increases on the inflation readings and worsening PMIs, I think you're going to see the euro release itself further to the upside. You're seeing VIX as well here in the 15-minute top right. You're seeing the VIX making inroads for new high or further highs on the day. Been running a bit late. This could be the boring middle part. Here we go. Here we go. Couple of pictures. Hey, how are you? Good to see you. How's the family and the kids? Yeah, good. Oh, you got a new camera. Oh, no, this is an old one. I just haven't seen it before, Christine. Oh, cool. Look at this guy. Pretty serious looking security guy. He looks pretty scary.
Good afternoon and welcome to the ECB Press Conference. I'm joined here on stage by President Lagarde and Vice President de Guindos. My name is Wolfgang Preußel. As we are meeting in a hybrid format again, I would like to ask those who will then later ask questions via their camera to put on their microphones and their cameras because we want to see and hear them. And now, give the floor to President Lagarde. President Lagarde, please.
Thank you very much, Wolfgang. And good afternoon to all of you, particularly those that I can see in the room. I hope you had a good break. So, today, the Vice President and I welcome you to our press conference. The Governing Council today decided to raise the 3 key ECB interest rates by 75 basis points. This major step front-loads the transition from the prevailing highly accommodative level of policy rates towards levels that will ensure the timely return of inflation to our 2% medium-term target. Based on our current assessment, over the next several meetings, we expect to raise interest rates further to dampen demand and guard against the risk of a persistent upward shift in inflation expectations. We will regularly re-evaluate our policy path in light of incoming information and the evolving inflation outlook. Our future policy rate decisions will continue to be data dependent and follow a meeting-by-meeting approach. We took today's decision and expect to raise interest rates further because inflation remains far too high and is likely to stay above our target for an extended period. According to Eurostat's flash estimate, inflation reached 9.5% in August. Soaring inflation and food prices, demand pressures in some sectors owing to the reopening of the economy, and supply bottlenecks are still driving up inflation. Price pressures have continued to strengthen and broaden across the economy, and inflation may rise further in the near term. As the current drivers of inflation fade over time, and the normalization of our monetary policy works its way through the economy and price setting, inflation will come down. Looking ahead, ECB staff have significantly revised up their inflation projections, and inflation is now expected to average 8.1% in 22, 5.5% in 23, and 2.3% in 24. After a rebound in the first half of 22, recent data point to a substantial slowdown in euro area economic growth, with the economy expected to stagnate later in the year and in the first quarter of 23. Very high energy prices are reducing the purchasing power of people's incomes, and although supply bottlenecks are easing, they are still constraining economic activity. In addition, the adverse geopolitical situation, especially Russia's unjustified aggression towards Ukraine, is weighing on the confidence of businesses and consumers. This outlook is reflected in the latest staff projections for economic growth, which have been revised down markedly for the remainder of the current year and throughout 23. Staff now expects the economy to grow by 3.1% in 22, 0.9% in 23, and 1.9% in 24. The lasting vulnerabilities caused by the pandemic still pose a risk to the smooth transmission of our monetary policy. The Governing Council will therefore continue applying flexibility in reinvesting redemptions coming due in the Pandemic Emergency Purchase Programme portfolio, with a view to countering risk to the transmission mechanism related to the pandemic. The decisions taken up today are set out in a press release available on our website. A separate technical press release on the remuneration of government deposits will be published at 3:45. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. The euro area economy grew by 0.8% in the second quarter of 22, mainly owing to strong consumer spending on contact-intensive services as a result of the lifting of pandemic-related restrictions. Over the summer, as people travelled more, countries with large tourism sectors benefited especially. At the same time, businesses suffered from high energy costs and continued supply bottlenecks, although the latter have been gradually easing. While buoyant tourism has been supporting economic growth during the third quarter, we expect the economy to slow down substantially over the remainder of this year. There are four main reasons behind this. First, high inflation is dampening spending and production throughout the economy. And these headwinds are reinforced by gas supply disruptions. Second, the strong rebound in demand for services that came with the reopening of the economy will lose steam in the coming months. Third, the weakening in global demand, also in the context of tighter monetary policy in many major economies, and the worsening terms of trade will mean less support for the euro area economy. And fourth, uncertainty remains high and confidence is falling sharply. At the same time,
large buyer
the
on the
labour
bond,
market
143.93s.
remained robust,
It's
supporting
taken out
economic
there, large
activity.
bid. About 400
Employment increased
pips.
by more than 600,000 people in the second quarter of 2022, and the unemployment rate stood at a historical low of 6.6% in July. Total hours worked increased further by 0.6% in the second quarter of 22 and have surpassed their pre-pandemic levels. Looking ahead, the slowing economy is likely to lead to some increase in the unemployment rate. Fiscal support measures to cushion the impact of higher energy prices
Euro moving on the highs
be
here.
temporary and
Be
targeted
aware, weekly
at the
P-Bal
most vulnerable
spot
households and firms to limit
00427s.
the risk of fueling inflationary pressures, to enhance the efficiency of public spending, and to preserve debt sustainability. Structural policies should aim at raising the euro area's growth potential and supporting its resilience. Inflation rose further to 9.1% in
Along
August.
the bond here, 143.77.
Energy price inflation remained extremely elevated at 38.3%, and it was again
Good risk
the
reward here.
dominant component of overall inflation. Market-based indicators suggest that in the near term, oil prices will moderate, while wholesale gas prices will stay extraordinarily high. Food price inflation also rose in August to 10.6%, partly reflecting higher input costs related to energy, disruptions of trade in food commodities, and adverse weather conditions. While supply bottlenecks have been easing, these continue to gradually feed through to consumer prices and are putting upward pressure on inflation, as is recovering demand in the services sector. The depreciation of the euro has also added to the build-up of inflationary pressures. Price pressures are spreading across more and more sectors, in part owing to the impact of high energy costs across the whole economy. Accordingly, measures of underlying inflation remain at elevated levels, and the latest staff projections see inflation excluding food and energy reaching 3.9% in 22, 3.4% in 23,
oil on the highs,
and 2.3%
VIX
in
rising.
24. Resilient labour markets and some catch-up to compensate for higher inflation are likely to support growth in wages. At the same time, incoming data and recent wage agreements indicate that wage dynamics remain contained overall. Most measures of longer-term inflation expectations currently stand at around 2%, although recent above-target revisions to some indicators warrant continued monitoring. Let's turn to our risk assessment now. In the context of the slowing global economy, risks to growth are primarily on the downside, in particular in the near term. As reflected in the downside scenario in the staff projections, a long-lasting war in Ukraine remains a significant risk to growth, especially if firms and households faced rationing of energy supplies.
Taking half the Dow short
off. In
off.
such a situation, confidence could deteriorate further and supply-side constraints could worsen
DAX
again.
weekly P-Val trades.
Energy and food costs could also remain persistently higher than expected. A further deterioration in the global economic outlook could be an additional drag on euro area external demand. The risks to the inflation outlook are primarily on the upside. In the same way as for growth, the major risk in the short term is a further disruption of energy supplies. Over the medium term, inflation may turn out to be higher than expected because of a persistent worsening of the production capacity of the euro area economy, further increases in energy and food prices, a rise in inflation expectations above our targets, or higher than anticipated wage rises. However, if energy costs were to decline or demand were to weaken over the medium term, it would lower pressures on prices. Let's look at the financial and monetary conditions now. Market interest rates have increased in anticipation of further monetary policy normalization in response to the inflation outlook. Credit to firms has become more expensive over recent months, and bank lending rates for households now stand at their highest levels in more than 5 years. In terms of volumes, bank lending to firms has so far remained strong, in part reflecting the need to finance high production costs and inventory building. Mortgage lending to households is moderating because of tightening credit standards, rising borrowing costs, and weak consumer confidence. Summing up, we raised the 3 key ECB interest rates by 75 basis points today and expect to raise interest rates further because inflation remains far too high and is likely to stay above our target for an extended period. This major step front-loads the transition from the...
BBC suspending all other programming for time being. The situation with the Queen seems to be getting worse.
To our 2% medium-term target. Our future policy rate decisions will continue to be data-dependent.
Oil lifting.
And
bond lifting now here again.
By meeting approach. We stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term inflation target. We are now ready to take your questions.
Thank you, Madame Lagarde. The first question goes to Luke Heighton of Market News International.
Good afternoon, President Lagarde. Two
DAX
questions,
lifting at the
if
weekly
I
P-Val.
may. The first, could you give us a flavour of the Governing Council's discussions, the arguments for and against that led to today's decision to raise rates by 75 basis points and not, for example, 50 or 100 basis points? And then my second question, from the present standpoint, how close to both the neutral rate of interest and the expected terminal rate does today's decision bring us, in your view? Thank you.
Oil lifting, new highs.
Thank you very much for these two questions. I'll take them in turn. On your first question, the Governing Council unanimously decided to raise the three key ECB rates by 75 basis points. We had different views around the table, a thorough discussion, but the outcome of our discussions was a unanimous decision. So how did we come to that decision? As I have said before, and as I have repeated in that monetary policy statement, since our last July meeting, we are data dependent and operate meeting by meeting. This is the methodology that we adopt. So we were presented by staff with their projection. We had the inflation numbers and the growth outlook, of course. So in the face of these extremely high numbers, the last reading was 9.1 for a monthly reading. But if you look at the last 10 readings, they were the last 10 highest readings in turn. We had a good analysis of the decomposition of the sources of inflation, a good analysis of where the inflation actually lies and what products are particularly affected. And while we conclude, of course, that energy is still the major source of inflation, it's 38.3% compared with a year ago, slightly moving down in these August numbers. But it is still a dominant factor, as is the increase in food. But we also have an inflation that spreads across the whole range of products, in particular in the service sector, where supply factors are less prevalent and where demand plays a role. So we have a range of the product and services that are actually north of 4%. So in the face of an inflation that is extremely high, that is of a magnitude and persistence across sectors of that nature, obviously determined action had to be taken. And this is very much in line with our determination to actually normalize monetary policy as we started back in December.
So breaking down a weekly
P-val.
P-val.
Consistently repeat that the European Central Bank is lagging behind. I contend that we are on a journey that started back in
Bond
December,
moving back up here.
where
It's
we
lovely.
decided to put an end to the asset purchases under PEP and under APP, to move out of negative interest rates as we did back in July, and now to continue on our normalization path with a front-loading exercise that we conducted today, because we believe that the deviation from target is such that it warrants this front-loading. And we also decided that this was not an isolated decision, but that we would raise interest rates further. We didn't say that we would raise interest rates at 75% as if 75 was the norm. It is not. We will determine, meeting by meeting, on the basis of data, how we reach to that level of interest which will actually return us to the 2%
On the bond,
target in the medium
144.
term.
spot
It is not
15s,
there at the
500
moment. Our
offered, another
forecast at the
509
end of December,
behind
which
that,
is not the
now
medium of term,
520,
but it's the end of our
530
projection
offered,
exercise, is at 2.3.
another 500
We are
behind that.
not there. So we have
It's going to suck the price up here.
more journey to cover going forward. But we had a very, you were interested in the flavor of the Governing Council. We had a very cordial, effective, deep discussion on all these matters. And that certainly helped us on the basis of the proposals by staff and the recommendation by our chief economist, Philip Lane, to actually go collectively in the direction of this 75 basis points hike. Now, you asked me about how close we are to the rate. Whether you call it a neutral or terminal is
Fix on the
obviously
highs
different.
of day here.
But
Got a
I
bit
would
more
like
to
say
go.
this. What I know today is that 0 is not the neutral rate, and that where we are is not the neutral rate. We are heading in that direction. It takes a front loading. It will take further hikes in the next several meetings of a magnitude and at a pace that will be determined meeting by meeting and on the basis of the data that we receive. But we are certainly heading there because that's where we believe that we will actually deliver on our 2% medium-term target as indicated in our strategy.
Thank you, President. The next question goes to Annette Weisbach of CNBC. Annette, please.
Thank you very much for taking my question. I have one on quantitative tightening, because clearly that could be also a way to drain liquidity from the system and help you to tame inflation. Have you discussed it? Is that something you are looking at? And then one question about your economic outlook, because clearly for 2023, you are seeing growth coming back to 0.9%, if I'm right. But this is still quite optimistic compared to other forecasts. So
That's
what?
24.
24, yeah.
1.9.
Okay. Okay, but for next year, why don't you see a recession? Because many economists do see one. Thank you.
Let me start with the second one. So the baseline outlook is 3.1 for 22.
Okay, we've just traveled a
1.9 for
whole
23,
deviation on the
and-
DAX on a
sorry.
month from plus to
See, I'm
minus
getting
1.
confused as well now. So back, 3.1 for 22, 0.9 for 23, and 1.9 for 24. So that's the baseline that we have in the projection by staff. We also have, and I think you will be receiving those documents as well, we also have a downside scenario that has been produced by staff on the basis of assumptions of risks in particular, some of which have already materialized. And in those numbers, you will see that from memory, growth outlook is at 2.9 for 22, is at minus 0.9 for 23, and at 1.9 again for 24. So while even in our baseline, we foresee some stagnation for the last quarter of 22 and the first quarter of 23, in the baseline, we don't forecast negative growth in 23. In the downside scenario, we do. That downside scenario differs from the current situation in that it includes, in particular, total shutdown of all Russian gas supply. Well, we're almost there. There's still a bit of flow going through the Ukrainian ones. But we also foresee
DAX moving up, or sorry, VIX moving up.
across
New highs,
the
new
whole
highs.
euro area, and no measure of compensation between the shortage of gas supply and other alternative sources of supply. So nothing coming from, either Asia or other producers of gas. And in particular, I don't think we take into account the LNG that we could be sourcing from, more of it from Norway or from the United States. So it's a really dark downside scenario, but it's one that concludes to a 23
Dow
recession.
trading monthly
But it's
VWAP.
the downside scenario, it's not the baseline. Okay. So on the issue of quantitative tightening, what we are focused on at present is the most effective and most proportionate and most appropriate monetary policy instrument that we can use. And we believe at the moment that it is the policy rate. So we are using the policy rate. We will continue using that policy rate in the next several meetings, as I have said. And of course, we will look at other monetary policy instruments. But at this point in time, it is still premature. But it is a matter that we will, of course, debate amongst members of the Governing Council in due course.
Thank you, President Lagarde. And the next question goes to, Jana Rando of Bloomberg. Jana, please.
Thank you.
Come on, Jana. What do you got?
Madame Lagarde. I have two questions as well. One, I want to ask you about inflation and interest rates. You've said inflation is far too high. Decisive action is needed. Do you expect, from today's perspective, and I appreciate it's a difficult thing to say, that the ECB will have to go into restrictive monetary policy to get a handle on inflation? And the second one relates to your
nice
mention
lift on the
of
Dow monthly
government
VWAP there.
deposits, and how they are remunerated.
31,429's current low.
The cap on government deposits has, along with collateral scarcity and high excess liquidity, led to a considerable divergence of short-term rates in markets. And I am curious what you decided on that, and how do you see the policy transmission improving as a result of your decisions? Thank you.
To your first question, I think it's a process of normalization that we have started. As I said, beginning in December, out of negative territory in July, and moving with this front-loading step in our journey of normalization towards such rates that will be compatible for us to deliver and ensure a return to our 2% medium-term target. So for the moment, we normalize. Once we have reached that level of normalization,
because I flipped my hedge to
enable us to have the confidence that
basically
we will return
long the cal now
to the target of 2% in the medium term. Then we will examine what is the situation on the basis of data, on the basis of
hedge
what
50%.
monetary policy can contribute to the economy. So we will cross that bridge when we cross that bridge. For the moment, we are actively busy and engaged in normalizing our monetary policy and in making sure that we actually return to our 2% target. On the other matter that you raised, you will be getting a technical press release that will describe precisely what decision we made in relation to the remuneration of government deposit. My recollection is that we're moving from 0 to DFR, but I don't want to sort of jumpstart, and I will let you just consult with great interest the technical decision that is embedded in the press release. Thank you.
Thank you, President. Next question goes to Ode Kersulek of BFM TV. Ode, please.
Thank you. Mrs. Lagarde, you told us that the depreciation of the euro has been a criteria to this hike today. Does the ECB have an objective of on the euro exchange rate, since this would appear a way to lower the imports, to the cost of imports, especially energy ones? And second question about the TPI, you unveiled details in the last meeting, but nothing has appeared in the official journal.
Okay. Let's get back to this here. Okie pokey. Let's get back to this. All right. So really, what we've seen. Let me try and get this camera up here. All right. So really, what we've seen here is Really, the buns getting absolutely hammered down, but into a really nice buying opportunity spot down here. We didn't actually trade the 143.40s to the tick. That's what we call sharking in this room. Gold now getting a hammering, dollar up, euro back down, dollar on the highs. Well, we've been saying that a few times over the last year. And yeah, I mean, I did look for a long on the bun down here, got walloped out in the first attempt, and then went back in on 77, leaning against 77s just in and around here. So worked into this a few times on the longs now and just trying to get out on the high, but building a core. I'm going to scratch this at entry should it come back and look to campaign from 143.40s. But I think this may break actually if we come back again down to the lows. So oil knocking on the door of 83, what is it, 83.08, bottom of this level. You can see it's really tough beans. P-Val, I think, is it P-Val we got here? No, it's, yeah, P-Val, 83.60s. Haven't quite traded there yet. But look at the VIX. It's got to get up into this area, test this trend. We've seen this. We've seen just the VIX need to be at this trend so much over the last 2 weeks. Well, actually, month. So it's just, you know, really good level there to pivot your equities trading around. Got out of my Dow shorts a little too early. And then looking for these longs on the monthly VWAP here and just getting a little bit beaten up on it, but might go back in now. So yeah, look, that's going to be it for this this YouTube stream. I hope you have managed to stay awake. Central bank meeting is never the most shits and giggles, but providing some of the best trading opportunities that you can get. So, all right, hope everyone's doing well out there. And listen, until the next time, I will see you soon.